All right, LA fires. In the next 5 minutes, I'm going to break down where we are right now. How did we get here? How the hell are we going to pay for this? And a few resources that might help. We're $150 billion into this loss. 9,000 structures, 24 casualties. I want to cover some misinformation. State Farm did attempt to non-renewal a myriad of coverages in the Pacific Palisades. They had a lot of exposure. They actually documented the fact that the state was, for some reason, not clearing the brush. They saw that exposure is too extreme, tried to pull out. I believe they brokered some deal with the insurance commissioner that actually seemed like it made some sense, where they carved out the fire risk and they advised their policyholder, hey, you can keep State Farm for all the rest of your perils, but the fire peril, you got to move that to Fair Plan. That's what went down in the summer. Okay, this nonsense where like State Farm is masterminding this fire or saw this directly coming is nonsense.
This is nonsense.
They have really brilliant people, underwriters, that are paid to identify outsized risk and to try to reduce that risk. That's all they were doing. Another one of my buddies, unfortunately, his house burned down. He's with State Farm too. He's in the Palisades. He's like, well, they're not going to have enough money. Listen, State Farm, if you're with State Farm, be it the reserves and their access to reinsurance, you're going to be made whole. If you're with the Fair Plan, you're going to be made whole. Probably. Is it going to be a fight? Is it going to be nasty? Is it going to take a long time? Yeah. A lot of large losses is like that, whether you're with Fair Plan or not. A lot of misinformation floating around about Fair Plan. Fair Plan is an involuntary private association. Okay? It's not controlled by the state. It's not a government agency, and it's not taxpayer funded. It's really propped up and paid for by all the admitted lines carrier. It exists to preserve the health of the property insurance ecosystem. When a traditional carrier, admitted line carrier, can't write coverage, none of them can, it's in nobody's best interest if nobody writes that insurance, because that can create situations where there's no mortgages available and all of a sudden real estate prices start to collapse. So it was understood a long time ago, and in fact, by 35 states within our fine union, they have an insurer of last resort. One you might have heard of is Citizens of Florida, Citizens of Texas. California Fair Plan is our version thereof.
I get it.
Okay? They are hugely exposed. Pacific Palisades alone, $6 billion of exposure. What kind of bag are they sitting on to pay for this? Well, they've got $200 million in reserves. Fortunately, they do have $2.5 billion in reinsurance, but that's not going to cut it. We still got a math problem. Right, and so there has been, since 1988, a mechanism for assessing another $1 billion in overages. And so that could be applied and will be applied. And that $1 billion, it's not individually assigned to State Farm pays $1 billion and Progressive pays $1 billion, Hartford pays $1 billion. Nope. It's in aggregate, so it's $1 billion. So that'll help them drum up $1 billion. But something clever our insurance commissioner did in June of 2024 is part of the modernization of the Fair Plan. He created space for the Fair Plan to assess additional exposure beyond that $1 billion to individual policyholders of admitted lines. And so traditionally, if you had Fair Plan, you were exposed to other Fair Plan events, and then you might be assessed directly through Fair Plan. But what can happen now is Fair Plan can assess Allstate, Hartford, Progressive, Liberty Mutual, Nationwide, and those policyholders will then receive an assessment from their carrier, and it will be at the discretion of the carrier as it relates to like what percentage is passed through. They can pass up to 100% now to their policyholders in the event of a catastrophe of like this. We have not seen California Fair Plan operate and conduct an assessment in so long, everybody forgot what that looks like. I had to go back 30 years to the SoCal brush fires and the North Ridge earthquakes to find an event where those outsized costs of a catastrophe were passed through. We haven't seen this in a long time, all right? But it's going to happen, and it's going to happen in a big way. In rank order, who's most exposed? Commercial real estate policyholders with Fair Plan are the most exposed. It was a condition of Ricardo Laura doubling the limits up to $20 million. Those passed straight through. Residential Fair Plan policyholders are obviously exposed as well. Okay, and those of us, and this is a surprise, this is the mic drop. Those of us with traditional private carriers Seemingly, we never signed up for this, but ultimately, we can be assessed to help pay for this fire. The fourth one on the hook, probably, we don't know yet, but SoCal Edison may have some exposure to this fire as well. A couple resources for you guys. United Policyholders, Amy Boxley, Executive Director. She does great work in guiding policyholders through a really nebulous situation. Red Guide to the Recovery. Sean Scott, the author, he wrote an excellent book that helps policyholders navigate the do's and don'ts of a major total loss like this. He also has a great Excel document that can help you with joggers for personal property. One of the things when your house burns down, you can't really remember what was in it. All right, would have been awesome if you had a Matterport, a 3D scan of the property, but let's say for a moment you don't have that. Use the Red Guide to Recovery. I'll link down below. I'm here for you. Hit me up in the comments. If you guys dig this, I'll create some more content around it. My heart goes out to LA. Keep building, y'all.